Stocks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine business groups clamor for a quick reset following President Marcos's call for all cabinet members to submit their courtesy resignations. Andrew Tsang, country economist of AMRO, joins us live. Security Bank Corporation aims for profitable growth for 2025. We speak with Security Bank CFO Edu Olbes. And from love language to a form of therapy, Klook reveals millennials and Gen Zs perceive traveling to be a therapeutic tool. We catch up with Michelle Ho, General Manager of Klook Philippines. Support President Bongbong Marcos's call for cabinet resignations, but they want quick, merit-based replacements. The Philippine Chamber of Commerce and Industry says the move was surprising, but hopes the resignations will bring in accountable and competent leaders. It also said the appointment must be done as soon as possible to avoid uncertainty and ensure economic continuity. Meanwhile, the Management Association of the Philippines backed the reset. MAP President Alfredo Panlilio says leaders must make tough calls to boost performance. Foundation for Economic Freedom President Calixto Chiquiamco says the reshuffle could focus on the president's term on the economy. Senators also welcomed the move. Senate President Chis Escudero praised the accountability but warned against reckless allies. Senators Jinggoy Estrada, Aquilino Pimentel, JV Ejercito, and Sherwin Gatchalian said the move promotes efficiency and public service. For her part, former Senator and now Makati Mayor-elect Nancy Binay urged a fast process to avoid delays in government programs. Former Palace spokesman Edwin Lacerda said the reset is refreshing and timely. However, Father Jerome Ceciliano of the Catholic Bishops' Conference of the Philippines said the president should not blame his cabinet secretaries for his administration's dismal performance in the past 3 years. Meanwhile, Bayan Muna Vice President Carlos Zarate called the move a quote-unquote political maneuver, not real reform. Well, let's take a quick check on the Philippine markets. We're still waiting for the PSEI opening figure. It's been trading for about 4 minutes, but the stock market fell yesterday, Thursday, by over 1%, with RCBC Chief Economist Mike Ricafort attributing the decline to President Marcos's call for all of his cabinet members to submit courtesy resignations. Luis Limlingan, head of sales at Regina Capital Development Corp, said investors remain cautious by the surrounding political uncertainties. As for the Philippine peso, it's open today, Friday, slightly weaker at 55.68 to the dollar. The peso closed yesterday stronger at 55.585 against the greenback. Now at the tail end of first quarter disclosures, and among them, Security Bank's net profit rose by 7% year-on-year in the first quarter, driven by higher revenues. The bank's net income was at 2.82 billion pesos in the first 3 months, translating to a return on average equity of 7.92%. Return on average assets went down to 1.01% from 1.2%. And based on its technical chart, Security Bank stock has pulled back once again after seeing resistance near 71.25. Ron Acoba of Trading Edge says the stock continues to trade within a broader downtrend, suggesting a prevailing bearish bias. Right now, the stock hovers near its support zone at 13-year lows. Acoba adds the stock must first break above 71.25 for a more sustained upward move. Well, with us now for more is Security Bank CFO Edu Olbes joining us in the studio. So good to see you, Edu. Welcome to the program.
Good morning, Cathy.
All right, so could you give us a bit of a reaction to the news du jour of the cabinet reset? What does it mean for the private sector, banking, and consumer sentiment?
A couple of points. On the positive side, I think it's refreshing to hear that I guess the government has interpreted the election results and tried to act on it. I think on the cautionary side, we live in uncertain times, and the sooner we can get past this with clarity in terms of areas of focus and emphasis, I think the better it will be for all, so we can focus on getting things back on track.
Right, consumer confidence really important for banking. Could you give us a bit of color in consumer confidence when it comes to borrowings? And because so far this year we've had a couple of event risks. We've had the midterm elections, and we've also had accumulated inflation really at record highs still, bearing down on consumers, and also the global policy uncertainties.
A couple of points. One, on inflation, actually things look better, meaning the inflation figures came in on the low end of the range this past period, which is a good thing. Suggests that the previous inflationary pressures are abating. Our hope is that with the plan changes in terms of tariffs, that we can maintain that on a go-forward basis. In terms of how we see consumer demand, from the perspective of Security Bank, we still see strong demand across our three consumer finance sectors, which would be home loans, auto loans, and credit card usage.
Well, to your point, the IMF just issued a report flagging risks to consumer credit that it bears watching. Would you agree with the IMF that it does cause some cause for concern for the banking industry?
It is typical that when you come out of an inflationary period that you have to be mindful of the risks in terms of the cash flow, both of your individual customers as well as businesses. And I think that's prudent to look out for those risks going forward.
Well, how is the bank now dealing with the Moody's credit outlook downgrade, which happened last month, with Moody's citing the possibility of the bank's capital ratio declining 13% because of the home credit acquisition?
Two aspects to it. First, Moody's actually confirmed the bank's very strong investment grade rating, which is a statement of fact in terms of where we stand today. The outlook, you're correct, was downgraded. And it's largely on the fact that they would like to see us maintain our capital at current levels, which is around 12% post-home credit transaction. And we intend to do that.
How? How, though? Because there is concern that capital ratios might decline by below 13%.
The way the bank defends the capital ratio is to improve profitability. You saw that in terms of our first quarter numbers, and we intend to do that for subsequent quarters. And that will give us the capital necessary to continue to grow our balance sheet.
Okay, because there is a lot of other moving factors there. There's loan growth outlook, so pretty positive on your end. But there's also the home credit acquisition and the dividend payout.
Yes.
So if they all come together then, what is your outlook for capital ratio?
We look to maintain our capital ratios more or less at their post-home credit levels, which is approximately in the neighborhood of 12%.
Home capital, how does it benefit, though, your business? Because there have already been advancements in your consumer loan space. So folks are wondering now if there are any synergies. And what synergies would there be with the acquisition?
First of all, on home credit. Home credit is a dominant player in terms of the point-of-sale finance business, meaning they extend loans to individuals who largely don't deal with banks. So it opens us up to learn from the capabilities that they've built up over their decades worth of experience in terms of learning the needs of that space. It is covering a market segment which is adjacent to that of the bank. The business is extremely profitable, and we look forward to it being accretive to Security Bank in its first year.
First year, so are we looking to maybe a return on equity, double digits perhaps? You're at single digits, but the rest of the rivals are like at double digits, Metrobank, BPI, BDO.
In the case of Security Bank, the journey towards double-digit ROEs is something that we've embarked on. We expect to end this year substantially higher than where we were last year.
Would that be mid double digits, single?
The ambition is to get towards double digits, 10%. I suspect we'll be there hopefully by the end of this year.
All right, but you've gone into green finance. Pretty
Yes.
interesting news yesterday. You've already made membership in the Alliance for Green Commercial Banks. So what's the next step for being sustainable?
The journey actually is never ending in terms of sustainability. Our affiliation with that organization is because what they do is try to share best practices that they've seen in other markets so that we can tweak it and apply it as it's relevant in our case. We intend to be a leader in sustainable finance, and that's a critical aspect of us partnering with the right groups in order to be able to deploy the right tools.
All right, well, we'll watch that space. Thank
All
you
right.
so much, Edu.
Thank you.
Appreciate your time.
All right.
Edu Alves of Security Bank joining us. And you're watching Money Talks. Coming right up, President Trump's sweeping tax and spending bill now at the hands of the senators after it was passed by the House of Representatives. And global oil prices are down as oil producers weigh in on increasing production. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The U.S. House of Representatives narrowly passed President Trump's sweeping tax and spending bill, sending it to the Senate, where it faces an uncertain future.
On this vote, the yeas are 215, the nays are 214, with one answering present. The bill is passed.
USA, USA.
The Trump's campaign pledges, though it went through various tweaks to satisfy different factions. The 1,100-page bill would extend corporate and individual tax cuts passed in 2017, cancel green energy initiatives passed under Joe Biden, and tighten eligibility for health and food programs for the poor. The bill also proposed taxing remittances abroad by 3.5%. The nonpartisan Congressional Budget Office reported the measure would add $3.8 billion to the $36.2 trillion debt over the next 10 years. Over 8 million Americans would also lose health coverage by 2034. Senators vowed to make substantial changes on the bill as the ball is now in their turf. Finance ministers and central bank governors from the Group of Seven, or G7 countries, made no mention of Trump's tariffs and had the language on the Russia-Ukraine war watered down in their joint communique. The ministers and governors met at the mountain resort town of Banff in Alberta, Canada. And among those present is U.S. Treasury Secretary Scott Bessent, who kept a low profile during the meeting. Canadian Finance Minister François-Philippe Champagne touted that attendees were able to find common ground in constructive discussions.
For me, this G7 is back to basic, back to the core mission. We found common ground on a number of things. And now what you have is that the best proof of unity is that we have a joint communique.
G7 ministers did not make an explicit reference to Trump's tariffs, which have disrupted the global economy. Instead, they called for a need to address excessive imbalances and strengthen macro fundamentals. Champagne said they are not skating around the issue, stressing that the impact of the tariffs was thoroughly discussed. Meanwhile, the ministers condemned what they call Russia's brutal war against Ukraine. The G7 Leaders Summit will commence on June 15 and end on June 17, with Trump among those confirmed attending. Global oil prices are down as OPEC Plus weighs in on whether to increase production when the group meets on June 1. Brent futures fell by 47 cents this Thursday to $64 a barrel, while U.S. West Texas Intermediate crude declined by 37 cents to $61. Bloomberg reported the Organization of Petroleum Exporting Countries and its allies plan to increase production by 411,000 barrels this July. The majority of the increase is expected to come from Saudi Arabia. By November, production could return to 2.2 million barrels per day, with one analyst telling Reuters OPEC Plus is quote-unquote letting go of a strategy to defend price in favor of market share. U.S. markets are mixed as the House passes Trump's tax and spending bill, with the Dow losing a single point Thursday's session. S&P 500 down less than 0.1%, and the Nasdaq rose by nearly 1/3%. The benchmark 10-year Treasury yield slid to 4.5%, and gold prices broke their three-day winning streak, settling at $3,292 per troy ounce. U.S. futures point to slight gains when the markets open later tonight Manila time. The Dow, the S&P, and the Nasdaq all up by less than 0.1%. As for Asian markets, they are looking mixed at the get-go. Australia's ASX 200 is down 0.1%. Kospi Index rising by nearly 0.4, and the Nikkei 225 up 0.5%. Carrying on a conversation on unlocking the Philippine potential at Business World's just concluded forum in BGC, we speak with one of its keynote speakers, Andrew Tsang, country economist for the Philippines at the ASEAN +3 Macroeconomic Research Office, or AMRO, who says decisive action is needed. He joins us now in the studio for more. So good to see you, Andrew. Thank you so much for joining us.
Welcome.
All right, so what do you make of it? The bold reset, is that the decisive action that we're wanting to see, or are we put in a place of uncertainty as of this moment?
Well, for the change of cabinet, basically we do not have a view on the political change, but for the from the economic point of view, we would like to see wherever there is the policy consistency, the continuities of the policy is the most important to boost the investment the investment sentiment, and also to improve the investment climate. So we are looking at whatever the policy continuities is from the change of the cabinet.
Interesting. Your policy continuity certainty is something that's reflected in your presentation, and it was that big takeaway. Where do we stand now when we come to think of the need for a comprehensive strategy to make the Philippines unlock its potential as an investment destination?
Yeah. Just as I presented yesterday, we compare with the pre-pandemic and also post-pandemic growth. We find that potential growth in this is lower than the pre-pandemic time, and mainly because of the investment and also the labor quality and productivity. So we expect the government, if want to bring up the economy to potential, then it need to improve the investment, including some policy to boost the investment, like to improve the infrastructure, and also to strengthen the sentiments for the investors. For example, as I mentioned, the policy consistency, and also to do something to enhance this kind of sentiment. And on the other hand, for the labor, the government need to enhance the training and to upskill the labor to fulfill the need of the new technology trend, because now people expect there is AI and also digitalization need to adapt this kind of new trend. Then labor skill need to upgrade, and what the government need to do is to do the investment and also the and enhance the upskills the labor.
Right. It is the common laundry list that we have to boost investments. You got to reduce red tape, got to upskill. Similar. But what makes it different right now is that rather than having a whole of nation approach, it would appear then that it would be the private sector lifting the cudgels or taking the initiative of making these happen.
Yeah, for example, for investment, you're right, nowadays it's still mainly from the government and the private sector. In this, the government on the right track to introduce a new PPP framework and then to enhance the cooperation between the government and also the private sector. However, it seems that the effectiveness is not that good, at least at the moment. The further to improve or to enhance the private sector informants need the government the government need to provide some incentive, for example, some tax holiday or tax incentive to encourage the private sector, and then give some incentive to the private sector to involve in more infrastructure project. On the other hand, for the upskilling, nowadays the government provide, in this they have a very good framework to provide the labor upskilling, but nowadays it's mainly still on the employability to encourage young people to involve in the job market. But it is not enough for the new technology trend, because nowadays we need the skill for adopting AI and digitalization, and also those kind of skill. The government need to work closely with the industry and also training provider to provide really fit to the industry needs. Otherwise, government may do a lot of things, but not fit to the industry need. Then,
True.
Yeah.
Right, right. It is indeed a bold reset that requires a lot of aligning. So a lot of work to do, but thank you so much for the
thank you.
recommendations.
Thank
For
you.
the outside looking in, so important for AMRO. Appreciate
Okay.
it. Andrew
Thank you.
Tsang of AMRO joining us in the studio. Coming right up, is travel therapeutic for you? Well, we'll be speaking to Klook Philippines after the break. Keep it here on Money Talks on One News. Well, welcome back to Money Talks. I'm Cathy Yang. Universal Robina Corporation has launched a new research and development center under its Malaysian arm, UR Munchies. The facility, located in Johor, Malaysia, features advanced product testing and development strategies. URC President and CEO Irwin Lee says it is a strategic asset to boost snack innovation across Southeast Asia. In the first quarter, URC's net income fell by 2% to over 4 billion pesos, but sales rose by 7% to 45 billion pesos. Rizal Commercial Banking Corporation plans to offer peso-denominated bonds, including sustainability-themed issuances. This is under its updated 200 billion peso bond and commercial paper program. In 2022, RCBC doubled the program size from the original 100 billion pesos approved in 2019. The bank says it may offer the remaining unissued bonds in various forms, amounts, and tenors, depending on market conditions. For more business stories, check out Business World Online. The all-in-one travel platform Klook is seeing more Filipinos traveling this year, with the millennials and Gen Zs calling it a form of therapy. Klook is Asia's leading platform for experiences and travel services. Last month, Klook Philippines partnered officially with Hospitality Innovations. Joining me now in studio is Michelle Ho, General Manager of Klook Philippines. Good seeing you, Michelle. Welcome to the program.
Thank you, Cathy.
All right, so it's the peak of heat, and it's a sign that friends and family might want to book that getaway and sizzle somewhere else. How's the app looking in terms of summer bookings? And are Filipinos booking locally or more in foreign destinations?
Well, we're definitely seeing a spike over the summer travel period, with both domestic and international travel experiencing substantial growth. For the more usual suspects that Filipinos love to go to Hong Kong, Korea, Taipei, and as well as locally in Bohol and Boracay, Palawan, we saw double-digit growth minimally for these types of popular destination. But Cathy, what's more interesting is emerging destinations. It's growing as of year-to-date, triple-digit in terms of bookings, and that includes the likes of Thailand and Vietnam, which really indicates that Filipinos are looking beyond the normal destinations that they used to go to, and are very much open to different types of culturally rich experiences.
And maybe also looking at those with visa-free access. I mean, I'm thinking about Japan, Korea. You got to get yourself a visa, and wow, the documentation that goes along it. I mean, have the millennials and Gen Zs figured, let's go visit where it's visa-free?
You're absolutely right. In fact, there was a slowdown around Feb and March this year, when we experienced a bit of backlog from the Japanese visa processing. And so we saw that that did indeed affect the interest for Filipinos who don't have a visa yet for places like Japan, and had reconsidered other places like Taiwan. At that time, it was very big on cherry blossom travel. And so visa-free was one of the main hooks of Taiwan, and we felt that amongst millennials and Gen Z as well.
Pretty interesting, and also the peso's appreciated. I was just last checking, it appreciated at least 4.8% against the dollar. That gives you a bit of a bang for your buck if you're going to travel overseas. Are we then seeing that as one of the key drivers as well, that it's cheaper now to buy holiday package overseas?
We're seeing that. So in fact, the strength of peso is also affecting the interest for travel into overseas destinations. We saw that in Japan, where a lot of Filipinos had felt that shopping and food, for example, is within their budget, within reach. We saw that in other places as well. So indeed, it is one of the major pull factors for Filipinos traveling. It had also impacted the frequency of travel. Back then, we'd see Filipinos travel maybe once or twice a year, but that has increased in terms of frequency, and that is not at the expense of domestic travel. So at least within Metro Manila, for example, we're seeing a lot of weekend trips being done. And like what you mentioned a while ago, it is indeed a form of therapy.
Is it? I mean, it was a love language in the previous year. So what are we discovering then from the millennials and the Gen Zs when it comes to looking for that elusive feeling of joy?
I think social media is playing a huge factor in propelling the desire to travel and experience different things. What they see on TikTok, what they see on Instagram, it really is inviting them to try different things. And so that is one trend that we're seeing. Plus, live tourism is also another interesting factor that Gen Zs and millennials love to experience amongst their friends and family.
On the reverse, the foreign tourists, are you seeing any great interest when it comes to your app and the bookings, foreign tourists coming to the Philippines?
The beauty is that Klook is a global brand, a global player. We have a lot of consumers all over Asia, and we're using that as leverage in terms of promoting the Philippines as well to these foreigners. And our numbers are great. So far, we've seen 160% year-on-year increase in terms of bookings. We're seeing a lot more from the U.S. We're seeing Korea pick up as well.
That's
And so,
interesting because the tourism department just about 2 days ago said that the reason why there's dismal numbers coming from South Korea is because of safety issues.
well, we have not felt that within Klook so far, but indeed it is something that we're helping the government in terms of supporting and uplifting the Philippine tourism as a whole.
Got that. Just very quickly then, you've been a Klooker for 11 years, well, 8 years. Where would you go next? What's a fun destination?
Well, I live in Hong Kong, so Hong Kong is always a good idea. But I've always loved other parts of Southeast Asia as well. So Thailand and Vietnam, that's on my list.
Got that. And I think our viewers have heard. Thank you so much,
Thank
Michelle.
you
really
so much.
appreciate it. Michelle Ho of Klook Philippines. And that is it for Money Talks. I'm Cathy Yang. Catch us again Monday, 9:30 a.m. here on One News. Have a great weekend ahead.